I think if someone is as crazy as me, I go into DeFi and I risk some money, and now it could, I could lose it. And in this case, if I know, okay, if I put in $100 and I might lose it, I personally don't need regulation because I know, okay, if it's gone, it was my fault. But if you want to have the mass market in, I think then you need regulation. And but obviously it depends if you do the regulation to um, to kill the market,
Hmm.
then it doesn't help, you know. And
Yeah.
currently, I think US is, in my opinion, or let's say, I don't understand how the US is dealing with the regulation right now with crypto because of the fact that they don't have a regulation. Obviously, many companies say, okay, we're not setting up shop in the US because we can't. There's no regulation.
Greg Sheldon here, your host of Metal, Steel, Manufacturing, and Business Pro podcast, where you learn everything about the metals and manufacturing industry that make your modern day life possible. Welcome, everybody, to the show. Today we have Tobias, and this gentleman is very interesting to me. We've been trying to connect for a while, and it keeps getting put off, but we both knew we needed to connect because there's a lot to learn from this gentleman. He has a very extensive background in investment banking, precious metals, and now cryptocurrency. So I think it'd be a really interesting conversation, and lots to learn for everybody, including myself. So welcome to the show, Tobias. Thank you for coming on.
Greg, thank you. Welcome. And also thank you very much for having you on the show.
Yeah,
Pleasure.
you're welcome. It's my pleasure. So tell us about yourself. Tell us, I mean, you've got, like I said, all those that experience in your past, and what kind of got you started down the path of finance, precious metals, and then cryptocurrency.
It started more or less at the end of high school, and I always somehow uh, in Germany we have at the end of the high school we have like a certificate. It's called the Abitur, and more or less then I didn't really know what I wanted to do, and so I got like a brochure, and there were certain professions were introduced, and so you could just have a look at what you needed to have and so on. And then there was about a stockbroker at the Frankfurt Stock Exchange. So I read it, and then I got very interested. And I mean, back then we didn't have internet, so I had to go to the library and search about this profession, and I had to talk to people. And but I didn't really find anything useful at that. It's still very interesting. So I applied for a bank apprenticeship and said, okay, I want to go to the stock exchange, become a trader. And so I did my apprenticeship, and then I went with this bank to Frankfurt. Obviously, in Germany, in Frankfurt it's a financial hub, and that's where all the financial things are happening. And then I started to always ask the head trader there in Frankfurt, yeah, do you have a job? I want to become a trader. And he said, no, no. And I kept on bugging him. And one day he got so angry, he said, no, I don't. Go somewhere else. Ask somewhere else in an investment bank. I don't have any jobs. And so I said, oh, okay. So I applied at Merrill Lynch. And lucky enough, they were just looking for like like a really apprentice. I was back then. I was starting with then. I was still writing tickets, like paper tickets by hand.
Mm-hmm.
And so I started at the very bottom, like handling all the calls and doing all the paper, and like traditionally bringing tea and coffee to the traders. And so I worked my way up, and later more or less I had my own book and doing my own trading. But I was doing execution trading, meaning fund managers came to us, look, I have an order, and then I had to execute the order. And so my colleagues were divided. Everyone was divided, and each has its own sector. And so you were responsible for one sector, and then all the orders in the sector came, to in your book. And so I did this for a while, and then later I always wanted to go to New York, but somehow, it was very hard to get over there. And then my boss said, well, I can't offer you New York, but I can offer you London. And so I said, yeah, fine, London is good. And so I went to London and with Merrill Lynch, and then obviously already that was a big step for me because, way bigger orders, way bigger trading floor, and so way more exciting than Frankfurt. And it was a good time then, and I learned a lot. And so there was the pure trading back then, like everything manually. And at the end of when I worked in London, they just started with trading bots, like for the algorithm, the algo trades, and they were horrible back then. So I kept on working together with the IT guys, and more or less they asked me, how I would trade an order. So they tried to start programming this, and then obviously today they're way more sophisticated. And I think the job I did back then, the execution trader, doesn't exist today. So you just if you're a fund manager, you put the order in like in the machine, and then the computer trades away, and way better than probably I would do back then. So, but it was a big experience for me and a great experience. And and then later I went on afterwards. I went on a trip around the world, and I came back, and then I found a job at a small hedge fund in Switzerland, and was trading there. And this was back to everything manually. And I got I was the assistant of the portfolio manager, and more or less, which means I did the back office, I did middle office, and all the support for him, and fundraising and all that. But it was very interesting for me as well to see, like, even though it was a very small hedge fund, to see it from the inner works, and I learned a lot. And then I went back to Germany to a German bank and do execution trading, this time for small stocks, also smaller ones, not the big blue stocks. But that was also interesting because this time I was working directly with the fund managers. So before at Merrill Lynch, the fund managers would call this the sales trader, and the sales trader, my colleague, would come to me and say, look, I got this order. And the small caps, I would speak directly to the fund manager. So they would give me the order directly. So it was interesting as well. And then it was during more or less the height of the crisis, of the financial crisis, 2008, 2009. And I got a call from a headhunter. He said, would you like to trade gold? I said, yeah, gold futures. No, not gold futures, physical gold. I said, physical gold? Oh, wow. Oh, no. I said, I have no idea about physical gold. I said, yeah, I know, there are gold bars and maybe coins, but that's about it. And I said, no, I think I'm not suited for this position. But she kept on bugging me and calling me and saying, okay, you know what, I just, go down to Munich and just have a look. And, if not, it's all fine. And then I went there, and it was very, very interesting. But the owner of the company, he asked me, so what do you know about gold? I said, well, no, I thought, well, I can't try to make anything up because they're the experts. So I said, look, to be honest, not much. I said, I know that gold will be traded. There's a bid and an ask, and that's about it. So he was very. I saw in his eyes he was shocked, and then I said, "Look, your headhunter kept on asking me." I said, "Okay." So I thought after the first interview, I thought, okay, this is it's not going to work. And then he called me up, said, "Look, we want to work together." So I started there, and I said, yeah, but you have to learn. You have to teach me everything from start. From zero, ground zero. I said, I know trading, but I don't know anything about physical precious metals. And so he said, yeah, he knows. And so he taught me. He started to teach me, and more or less back then his head trader, he was supposed to teach me. But after 4 weeks, this guy made off on his own, started his own precious metal company, so I was left on my own.
Oh dear.
And my boss, he was also one of the CEOs of the company, one of the founders, and he didn't have time. He had to go to bank meetings and to other meetings, and so most of the time I was on my own. So I had to teach myself everything about the precious metal. But what I did was, back in hindsight, it was very risky. But I called the other guys where I would buy the gold from. I said, look, I'm new. Can you help me? Yeah, can you teach me? Can you tell me what I need to know? And I knew it was risky because they could have screwed me up, telling me something and teaching me something which wasn't good and wouldn't help me. But the thing is, in precious metal, the community is very small, so everyone knows everyone, and I think it doesn't help you if you screw someone over, because somehow it will come back, and then you know everyone, and then we'll talk about, and then I will say, okay, maybe I don't do business with him. And so when I told this back a little bit later than my boss, he said, "Are you crazy? You can't, they could have taught you whatever." I said, "Yes, I know, but I mean, I knew that everyone is kind of depending on everyone else because there are not too many to trade. It's different in the investment banking. You say there are so many other banks you could trade with, but here in precious metals, the family is not that big."
Yeah.
And so it helped a lot also regarding the relationship I then had with all the other traders, because it was very open, very friendly, and also over the time I got friends with many of those colleagues. But it was a good time for me, and obviously it helped me regarding trading, that I already knew how to trade, but I had to learn all the things regarding the physical precious metals. And I would say the biggest difference is obviously, first of all, you have to, you buy or sell very quickly, same like in stocks. But then if you buy, you have to say, okay, now I bought it. How do I get it from Canada or from South Africa to Frankfurt?
Yeah.
Or if you have sold it out, you say, okay, how do I get it from here to maybe Hong Kong, where I sold it to?
Yeah.
So more or less, you're not only a trader, you're also a logistic person. You have to say, okay, how much does it cost me to get, I don't know, like 500 ounces of gold from here to New York? How much does it cost? I have to know it beforehand, because otherwise you might have made €1,000 profit, and then maybe it'll just cost you 1,500. You're 500 in the hole. So it's an interesting business.
Yeah, it would be. It would be. Something came to mind. I'm wondering if this happened. Were there people that would hold the gold for other people and say, "We've got your gold," like as in a reserve or something? Would that happen in the industry instead of shipping it across the world? What is that?
Yes, it does. But this is more or less not between like this is most of the time like when you say you have gold local London or gold local Zurich. That means the gold sits there in the vault, and you might just sell it from bank to bank. So let's say you're bank A and I'm bank B, and you say, look, okay, I'll sell you 100 kilos of gold, local London. They say, okay, so you got the gold there. You got the gold in the vault in London, but you never want to take it out. So you might sell it back to or on to someone else, to bank 3, and then you tell them, look, I've got 100 kilos of gold local London. And then the guy in Hong Kong says, yeah, okay, it's fine with me. And more or less, it never leaves the vault.
Okay.
It just, it gets transferred from bank A to B to C. It's different with retail customers, obviously. If you're retail, you say, look, I'm buying 1 kilo of gold. You wouldn't be very happy if I say, look, it's in London in the vault. You say, yeah, but I want to have it in my home. I want to have it maybe my bank or so. So I have to obviously get hold of the gold and then ship it to you.
Right.
I mean, there obviously, let's say you have already a couple of kilos at home. Say, okay, now risk is getting too high. I'm buying more gold, but maybe I have it stored somewhere in the safe, like be it at the bank or be it maybe at a logistic company or safe deposit. That's different. But the banks, most of the time, the banks they do only local London, and it stays there. And they might say, okay, but I need the gold in Zurich. So maybe they switch with someone. They say, look, I got 100 kilo gold local London. You got 100 kilo gold local Zurich. Can we swap? And obviously you have to pay them a little bit, but then you got 100 kilo gold in local Zurich, and then you can maybe someone maybe wants to take it out. So that's the difference there.
Okay.
But for the retailers, it's always you have to ship it out to them. They want to have it physically in their hand.
So is the retail up to a certain amount? I mean, where does that transition happen from retail to?
No, the retail, in my opinion, doesn't have anything to do with the amount.
Okay.
But just, are you trading as, private person?
Yeah.
or are you trading as a company? Maybe let's
Got it.
say you are a physical trader. You got a company. You might buy for the company, or you say, look, I'm buying for my personal vault, so I'm buying some coins as well. So it just depends on who you are buying.
Okay.
So,
Okay.
I mean, but retailers they bought maybe 1 gram because they might want to give it as a gift to someone, and then you have retail customers that buy 200 kilos of gold.
Okay.
Obviously, high net worth individuals.
So in this case where you have gold in 2 different locations, is it really just an exchange of paperwork and dollars? Is that really how that works?
Yes, more
Okay.
or less. It's
Okay.
really just register then instead of person A or bank A, it's bank B. Yeah.
Yeah. And how do you verify that? Is that, I mean,
That's trust.
maybe not today because we've got options for that,
Yeah.
but back when there wasn't any options besides what's on a piece of paper, handwritten, how did anybody verify that at the time?
Normally, you would have someone who is more or less maybe a third party. Let's say someone who owns the vault. He says, okay, I'm just the guy who owns the vault, and I keep record of who owns which bar.
Okay.
And then obviously you have sometimes auditors coming in. That's obviously what you would want to have. That okay, if I buy 100 kilos of gold, I want to be sure that really 100 of kilos of gold are in that vault that belong to me.
Yeah.
And you have this also in the private sector. Let's say you have it in the store facility. You could also say, look, can I come tomorrow and have a look at my vault?
Okay.
I mean, it's either that maybe there's one big vault and you own 100 bars within this vault. Or you say, I have my own vault and whatever's in there is mine. And nothing goes in and nothing goes out with me knowing because you got the keys. So it depends. But with the banks, it's obviously either it's one bank who owns the vault and then they're more or less responsible for whatever's in there is real. But I mean, I think it was a couple of weeks ago, there was a story with, I think it was nickel and JP Morgan. And I mean, they bought what they thought is nickel, put it in the store somewhere.
Yeah.
And then apparently it was fake.
It was not nickel. No, that's right.
Well, exactly. It wasn't.
Wasn't. No, it was Mont or something. I can't remember the name of the company, but yeah.
So obviously, whenever you have the situation where you just say, okay, it's local London, for example, and you're not going to physically get the gold, you have to trust that whatever you are told that you own is obviously there. But yeah, that's probably one of the biggest things also in precious metal trust. You have to trust.
Oh, for sure.
You have to start trust someone somewhere in the line. You have to trust.
Yeah.
To start trust, but obviously things happen. Yeah.
Well, of course they do. Yeah, you get people that screw that up for everybody else. But yeah, and that's any industry. But it's nice to hear that it's not a really big network. That's good. So curious. So the futures. So I don't know. I mean, this is why I'm asking so many questions, Tobias. I really don't know anything about it. I mean, I know what gold is, but I don't know this part of it. The gold. So it's sitting. Let's say somebody has let's just use easy numbers, $1 million of gold in their vault. And then can they leverage that? And is that and then they have the paper that goes onto the stock market that turns into futures. Is that how that works basically? Is that no?
What you could do, I mean, the future is more or less similar with like oil futures. I mean, you buy the future and most of the time, most of the traders who just trade back and forth, up and down. Most of the time, those traders, they don't want to get the physical commodity delivered to the doorstep.
Yeah.
Let's say you trade oil. Most of the time, you just buy at 80 and want to sell at 85, for example. You just want to make the profit. It's different if you're an oil company and you say you want to hedge your exposure. You want to, you say, okay, I got millions of barrels of oil and I want to sell them at a certain level. then you really want to deliver on those futures. Or if you buy the oil, if you're like a company who needs oil for production, you might buy oil because you say, okay, in 3 months' time, I need the oil physically. And then you also want delivery on the futures. As a private person, most of the time, and then you store it somewhere. And I personally, if you just want to buy and sell for the price difference, I would not suggest buying physical gold,
Right.
because the added costs are too high. You have logistic, you have storage, and you have also the big spread. Like the added cost. So if you just want to buy gold and think, okay, it goes from 2,000 to 2,500, I would then just buy so-called paper gold. You either buy an ETF or you buy options or futures, because the spread is thinner.
Yeah. Okay. Very good. So is crypto, not so much crypto, but blockchain being utilized in the verification process for the gold nowadays? Or is that still kind of working?
It starts actually. There are some coins or tokens that are backed by physical gold. So I know one company in Singapore, and meanwhile there are a couple of gold tokens. I don't know all of them, how they actually work. If you buy a gold token and you buy it for the reason that you think at some point you can exchange it in gold, then obviously you have to do the diligence. Where is the gold actually stored, and is it there?
Yeah.
If you just buy the token because you think, okay, gold goes up, and you think the token is like linked to gold, then kind of you don't really need to know where the gold is, because you never want to have delivery. But if you say you want to have the chance to actually get the delivery, you actually have to check where it is. And the company I'm talking about in Singapore, they more or less, when they put the gold on the blockchain, and then you have it in their safe. And you can also always see, let's say you buy it, you see it on the blockchain, they more or less the kilo gold changed to you, more or less, change the buyer. And then let's say you sell it, you see also the transaction on the blockchain. And you can also get delivery. If you say, okay, I would like to have delivery, then you can say, okay, send me my kilo of gold. And then more or less, I think then there are also most of the time added costs, because then they have to obviously ship it out somewhere to you, and so you have to pay a little bit of logistic cost. But this is only when you say, now I want to have the delivery. Otherwise, it stays on the blockchain and it stays in the safe for you, more or less, to back the coin.
Okay. So I should have done this first, but can we clarify blockchain a little bit, just so if anybody's unsure that's listening, like what exact, not to get too deep into it, but what is the blockchain basically?
The blockchain is more or less, it's like so-called ledger. So normally when, let's say, we own a vault, and then we say, okay, now customer A owns this vault, this kilo gold bar. And then he sells it on, and we say, now customer B owns it. We both have centralized power over this, more or less, over this ledger. But the blockchain is more or less, you have a couple of ledgers, and everyone has to verify the register that now customer B is the owner of the gold. And so if we are the only one who say now customer C is the owner, and all the others don't agree, then they say, no, you're wrong. So it's more decentralized than what it's now with the safe, for example.
Right.
And that's very basic. That's more or less.
So it creates transparency, right?
Yes, and you always see transparent more or less the last change. If let's say if I buy 1 Bitcoin and sell it to you, I send it to your wallet, everyone who would have your wallet address could see you received 1 Bitcoin. So it's very open, very, very transparent. And this is more or less in the case of if you put the gold on the blockchain, you would also say, okay, now I see that I own the gold. And then if you sell it, you say, okay, now I see it went on to a different owner. So it's very transparent. Obviously, you still have to make sure that the gold is there where they say it is, you know. I mean,
Yeah,
I
well,
can
yeah.
still put it on the blockchain and say, Greg, that's your gold coin. And then say, okay, you turn up at my safe and say, where's my coin? And, oh no, he's there. We don't have the gold. No, then that would be that would be not so nice.
Yeah.
But obviously, as long as it's in the safe, everything is good. But that goes. It's the same like if you have gold without the blockchain. I mean, if you put it in the bank safe,
Yeah.
you hope that it's there next day when you come and open the safe. It's more or less the same thing.
Yeah, there's always has to be a level of trust, right?
Yes. Yeah.
And if that trust gets destroyed, other people find out real quick. So we have that accountability piece in our culture, which is nice because people talk. So what have you noticed in your time in gold? I'm sure the technology is one, but from when you started to today, what has been some really big changes in the industry for the good or for the bad?
I worked directly in the precious metal industry from 2009 till when was it? 2021. So quite a long time. And I mean, in the beginning, for me, everything was new, obviously, because I came from the stock trading side, investment bank side, then to the physical precious metal, and it's different. It's kind of, I would say, maybe a little bit slower, a little bit more traditional. And the big difference between who buys gold and who buys stocks is a little bit. Someone who buys stocks is expecting positive things, higher prices,
Okay.
maybe higher dividends, and he's looking forward maybe the nice product or it's something positive. And most of the time, the people who buy gold, they always want to prepare for
The worst.
some fiasco, for some chaos,
apocalypse or something.
Yes, either be it in the financial area, maybe the financial system breaking down, or extremely high, I don't know, uncertainties.
There's certainly a lot of that today.
Yeah, and so it's a different buyer, to be honest. And obviously, there are some people that just say, okay, between 3% and 5% of my net worth, I want to just put in gold for diversification. He doesn't expect anything bad. He just says, okay, if maybe stocks go down, maybe gold goes up, so it balances my portfolio. So that's maybe a little bit different. And the other thing is obviously it's a little bit more traditional because you have to send the physical stuff. So it's different. Like in stocks, you just click and then you see it in your portfolio. Everything is computerized. And in the precious metal, in the physical precious metal area, many things still have to be on paper because you have to put the paper into the paper has to go through the process because everyone who's in the line kind of has to check that he did his task to make sure that it's secure, that 10 gold bars in and not 9 if someone bought 10. So all those security measures have to be kind of ticked off. And so obviously everything can also be done computerized. But if you have the traditional physical, let's say, the working process for packaging and then shipping out, you still have to have the paper stuff. It might change in the future then, maybe also with RFD codes or maybe even blockchain then. So that could also change. But then you still have to have every person who is in this process have to kind of then scan maybe that he did the task, that he checked how many coins are in the package and so on.
Yeah.
So yeah, but
there you go.
I guess technology will also help there, definitely.
Well, always it does. I mean, that's where we're at. It's always a new technology, no matter what time you're in. You know, ours just happens to be blockchain and cryptocurrency right now. So I'm curious, how did that change happen? Where did you just see that as a necessary thing, as a progress in your career? I mean, not just your career, but in our culture, in our financial industry that blockchain and crypto were just a next thing. What was that for you, the transition?
I mean, the first time I came around or kind of heard about crypto was, I don't know, I think some weird or strange article about, I think it was about Silk Road, where
Yeah.
they buy
Yeah.
drugs, weapons and stuff. And then it said you have to the currency is Bitcoin. I thought, okay, Bitcoin. And so I thought, okay, this is only for kind of doing things on Silk Road. So I didn't pay any attention. And then later I read an article about blockchain. And then in the beginning, I didn't realize that more or less blockchain is the underlying technology and Bitcoin is just the thing we kind of see. And then at some point, the article spoke also about Bitcoin. And said, Bitcoin, I heard about Bitcoin. So then I started reading a little bit more about it. And then I realized, okay, Bitcoin blockchain is not just for, dealing on Silk Road, but that there might be a little bit more, but it was already more open. But then I thought, yeah, this might only be for computer nerds because I didn't understand the programming and stuff.
Mhm.
So I didn't really pay too much attention. But at some point I thought, okay, I got to read more about it, and then more or less I got really hooked. And then I thought this is very interesting, and maybe like a new technology that And then everybody said, yeah, it's like the internet, and I said, okay, I really have to dive into it. And then more or less, I think once you go down the rabbit hole in crypto, more or less it's over. I think in crypto it's only if you start reading about it, you say, okay, nice, but not for me, or you say, okay, I'm going, deeper in. And so that was the case, and that was in my case. And then I thought, okay, I tried to kind of make the switch to get into the cryptosphere. And so it was not because I said I don't like precious metal anymore. It
Fair
was
enough.
just more saying, okay, I want to go into this new technology and see if I can dive into this.
Yeah, yeah. So would you say you're an early adopter type of person?
Not really, to be honest. But
Okay.
it was like precious metal. It was there is not too much change in precious metal happening.
No.
Obviously, I mean the like gold is already thousands of years old, so there's too much
Yeah.
change. And also the only thing that's kind of new is maybe the new year of the coin. The 2023 gold maple, the next year 2024 gold maple, but it's not nothing new. It's still a round coin. And there are some security features maybe that they try to implement so that you maybe can test if it's real, or you can kind of trace your bar maybe back to, let's say, the Royal Mint or the US Mint, to have maybe a little bit more security. That's not a fake bar or so. But other than that, there's not too much development. Doesn't have to be bad, but it's just I thought, okay, this is a little bit more interesting. So yeah, but that just got me started then in crypto.
Interesting. Interesting. Yeah, gold is an interesting one. And I love that perspective on the buyers, because that's what I see too. And usually it's people that are like building bunkers and stuff underground that are promoting this stuff. But I mean, but then it's all my life I've seen that, that the world's going to come to an end and gold should be the only thing you have. And it's that hasn't come to fruition yet. But it is a good investment. And I'm curious, does gold sell itself? And with that, what are like the biggest objections when you're doing the physical gold? Like, was it more of a logistics job, like you said, or like how did that work? What was the biggest challenge in that?
For me personally,
Yeah,
or
yeah, for you.
for me, you mean during the normal process or during learning? Like
Well, I guess all of it. Yeah, that mean
well, when
then
I started, it was probably the biggest learning curve,
of course.
because it was so new to me. And um, as I mentioned before, I knew trading as such. Um, but then I got into more or less, I got thrown to the cold water, and more or less I really had to learn everything from scratch. And it wasn't like a dry run, like I had to more or less step in right away, and it was for real. I mean, it was real gold, it was real money. It was not that I say, okay, I try, and then if it doesn't work, okay, nothing happens. So I mean, I had to make sure that when I buy, that I buy at the right price, that I buy the correct product, and so on. And I mean, I remember many things where things happen, and then my counterparty said, "Look, I have to stop you. You have to ask differently, or we don't have this product you're asking for, the competitor." So I had to learn a lot of things. But as I mentioned, I mean, I told those guys, "Look, I'm new. I know nothing. Please help me." And I think that helped me, because they thought, okay, he trusts us, even though we are kind of his counterparty or sometimes even competitor. That he asked us for help and tells us openly he doesn't know too much. I mean, I knew exactly. They would have known after 2 minutes anyway. And so
well, exactly. It's just that I commend you for that, being humble, because it's not easy to do, right? But
I think it was my only chance.
That's right.
Otherwise, they would have thought, he thinks he knows. Now we are going to test him. We are going to screw him over. And so, but that was the biggest hurdle, to really find out, like, what is a good price. I mean, you have your, sometimes when you go to someone and say, "Look, do you have gold maples?" And say, "Yeah." And how much is the premium? And they say something, and if you don't know, let's say they say 5%, and you as a new person say, "Okay, 5%, is this good? Is this bad?
Right.
Should I not pay more than 3, or is this a deal?" So I had to learn. It took me a while till I knew, is this a good deal? Is it a good offer, or is this too high, and I rather should go somewhere else and ask somewhere else? And obviously, you have to learn this. It's only on the job. You can't
by doing it.
Because now, if I tell you now 5% is good, maybe if there is a crisis and there's shortage in the market, 5% might be way too low. Because you say, well, I'm paying 10% now, but I sell it on at 12%. If it's very, very quiet and no one is buying anything, you might say, "Oh, 5%, way too high, because I can't sell it." So I might pay 3% only and still struggle to find a buyer. So it's always, you can't teach it. You have to more or less do it on the job. I guess that's with many things, especially in like the trading thing,
I would say anything.
Same in your area, I guess, with your methods.
Anything. You can't explain it, and like your mind creates an algorithm too, right? That it's really hard to teach somebody. You can give them highlights, but they've really got to go through it, because you have to take it in through your eyes. So with your experience, I'm curious, what are some things people can look for when buying physical gold? Like things that would be bad. Let's start with bad. What are some bad things to look for? Bad in the sense of, I'm going to get screwed, or, this isn't real, or I'm buying at the wrong price, the premiums are wrong. What do we look for?
I think regarding the premiums for a private retail customer, it's very tough to kind of figure out, is this now like a time of 5% or 10%? The only thing I would say he could kind of figure this out, if this, at least in relation to other competitors or to other companies, is this good or bad, is to compare the prices. Because if you buy 1 ounce of gold maple, given they're real, not fake coins, it doesn't matter if you buy it at shop A or shop B. It's 1 ounce of gold and 1 gold maple. So it's a very transparent product and replaceable. So it's, 1 ounce of gold maple is more or less 1 ounce of gold maple. So if you see one sells it at 2,500 and the other sells it at 2,400, and then a third one at 2,600. It's kind of in the same range. But if someone sells it then at 1,500, why should he sell it this low?
Why? That's right.
Because gold is more or less kind of like cash, because you got the spot price, and normally in normal circumstances, if you sell gold, it's normally always around, maybe a little bit below spot price. Obviously, you might have to melt it if the coin is stretched or so, but if the coin is in good standard, more or less, it should get you kind of around spot price.
Okay.
So if someone is selling it way too low, like compared to the others, why?
Yeah, what's the reason?
What's the reason exactly? So I would always stick with the most prominent products.
Okay.
Gold Eagle, Gold Maple, Gold Krugerrand. So you can compare with other stores, because those are the ones that most of the precious metal dealers have.
Yeah.
If you go for exotic coins, there are two things. First of all, you don't know is this a good price or not. And the other thing is, if you want to sell it, dealers might say, well, nice coin, but I can't sell it on. I don't have many people who are interested in this. Whereas with a gold maple, it's way easier to sell it on again. So some dealer might say, well, this is too exotic, this coin, I'm not going to buy it at all. I'm not interested in this coin. So it's always, one thing is buying the coin. That's easier than selling it on maybe for a good price. So I would always check prices with other big dealers to see if they're more or less the same. I mean, if it's different between $10 and $30 now, the price fluctuates all the time anyway. So that's something I would look at. And I personally would never buy from eBay or this kind of, like P2P dealing platforms, unless it is a dealer who sees this just as a different approach. Let's say he has an online shop anyway, and then he says, oh, okay, in addition to our normal website, normal online shop, we also sell on eBay. Then it's different, because it's just a different selling channel.
Right.
But private person, the problem is, as a private person, it's very hard for you to actually 100% check or make sure that the coin is real without scratching it or drilling a hole in it. And I would rather say I'd rather pay a little bit more from a trusted dealer, and then instead of maybe buying it from a stranger at eBay.
Okay.
So I mean, the trust is always, as we mentioned before, it's a very big factor. And if you have the chance, maybe because a dealer is close to your area where you live, maybe the first buy, go there in person, and you see how they work, how they communicate with you, and start with a small amount, because in case something happens, you lost a small amount, and then you can increase your purchases. So you see, it doesn't matter if you buy online from their shop or if you go there in person. You see how the process works. Let's say you buy online, you post you place your order, then you see, do they send you a confirmation email? Are they available by phone? Do they answer an email if you have a question? And so on, the whole process. And then, how long does it take until they ship? All those things. And then when it arrives, how is it packed, and so on. And then you can say, okay, I see this works. I'm starting to trust this company. And then you can slowly increase your orders. So that because you have to trust, you have to start trusting somewhere. And in the case of the retailer, it's more or less the dealer, either online or if you have a local store, and you have to trust him. And you have to trust him that the stuff he buys or sells to you, he buys it from a reputable source as well. But you don't know where he buys them from. Maybe directly from the mint, or maybe from another dealer.
Right.
But you have to start trusting somewhere.
Yeah, fair enough. Ask lots of questions, right?
Yes, definitely.
Based on the supply and demand theory, if we're mining more gold, Does that bring the value of gold down, or is it so minuscule the amount we're mining that it doesn't really affect the price of the gold?
I personally think that the price of gold is still, I say, moved by those traders who deal the big tickets in the paper,
Oh, okay.
paper gold, because you need way less money in, let's say, in the future markets to move way bigger amounts of gold. Whereas if you buy physically, and in this case, it doesn't matter if you're a private person or if you're like a company,
Yeah.
you always have to pay 100% upfront before you get the gold. So a normal dealer would never say, okay, Greg, you buy a kilo gold, send me 50% first, then I send you the bar, and then you send the other 50%. It's always more or less who has the bar or the coin, more or less waits until he gets paid in full.
Okay.
And then they ship out. I mean, it's the same with dealers. Let's say if you're buying at the Royal Canadian Mint. I mean, additionally, those are state owned, so they say, well,
yeah,
we are the power, and then you have, if you want something, you have to pay in full, even if you have to wait 2 months. You have to pay in full.
Yeah.
But then more or less they only ship out if you actually paid the whole amount. Whereas in the futures, you just put down your margin, and then you can trade with way bigger amounts. So I guess even if the physical gold market is huge, the paper market for gold, the paper gold market is still bigger.
Okay.
So I guess the mining itself doesn't change too much.
Very interesting. Okay, so are there any technologies, whether it's, I don't just mean digital, could be chemical or anything that to verify? Let's say you did all your due diligence like we've talked about and everything's great, but you're still skeptical. Is there any test you can do on the piece of gold to verify that it's gold? Is there a weight? Is there what is it?
Well, the normal thing is obviously the dimension, and then obviously the weight. But most of the time, I would guess I don't have gold weight, at home. So I just have my kitchen scale. So
Yeah.
it's not good enough. What I would do, I would go, if you're skeptical, then I would take the coin and go to a different coin dealer and say, look, is this real? Can you test it with
Got it.
whatever means you have,
Yeah.
And I mean, there's some, you can like scratch the gold coin on a stone, and then with chemicals, see like how the finesse. But then the coin is scratched, and then
True.
when you sell it on, the dealer says, well, this coin is scratched, I can't sell it on, I have to melt it, so you get less. So as I said, I think the best thing is to, even though it might cost maybe $10-20 more, buy from a well-known reputable dealer.
Yeah.
Check out first, I don't know, maybe like reviews, but also like online, everything about them before you actually buy it. Because as a private person, as I mentioned, it's very tough to, for 100%, make sure that you got a real coin, the fake one.
Okay.
But obviously, the best thing is just to try to get it from the source that hopefully only sells, genuine coins or genuine bars.
Well, there you go. Very interesting. So what are you doing now in crypto? I mean, you've got it on your LinkedIn. How's that going? Are you?
I try, because I was trading all the time. I was trading stocks, and I was trading precious metals.
Yeah.
So the logic role was more or less become a crypto trader. And so I applied for jobs as crypto trader. I always said, do you trade crypto? I said, yeah, personally, I trade a little bit of crypto. Yeah, but professionally, I said, no, I'm dealing gold.
Mm-hmm.
Okay, no, that's not good enough. And I always wonder, why now? Because for me, I thought, trading is trading, be it stocks, physical gold, or bananas, who knows? But in hindsight, I think I'm happy that I didn't get the job as a crypto trader. Different is
The volatility?
where, not so much, because now the stock exchanges so volatile as well. But it's the information. Where do they get the information? When I started in trading stocks, it was more or less paper, TV, and then obviously talking to other traders. That's where you got the information, be it rumor or be it facts and so on. In crypto, it's, let's say, if you're not in a certain Telegram channel, you're not getting news because maybe there's just a rumor, or if you don't see the tweet from Elon Musk right away, you might be, 5% behind until you realize something happens, and then you start looking, where is it? So where the sources for the news are way, in my opinion, way different than they used to be. And so I think it's tougher if you're like a market maker. Obviously, you have many times you have more algorithm now that I guess back then when I started trading equities. So obviously you have your computer programs and they trade doing the market making, but still if there's a big move, you still have to find out, or want to know what happened. Um, got someone maybe liquidated, or is there some tweet somewhere, or some influencer launched his newest YouTube video, and maybe he was talking about some coin, and you're the market maker and you don't know what's going on. So I think that's tough. And so I think I'm, in hindsight, I'm glad that I'm not now trading as a market maker, cryptos. And so I'm taking care of. I'm working at a German crypto exchange, and I'm taking care of our top traders, so the heavy traders.
Good.
And so the good thing is, I know about the trading side, and I can relate to their, let's say, thoughts, problems, and but I also know about the crypto, let's say, crypto technology and stuff, so I can help them there.
Yeah.
But
Yeah.
very interesting. Very interesting.
It would be. Absolutely, it would be. And I wrote down the word volatility because I'm so curious, because I follow it too. And I'm so curious about what will stabilize cryptocurrency. Yeah, like that it just seems like it's so up and down all the time. And I'm wondering what the reason is for that, and if there is a way to make it more stable.
Oh, I think it's probably when way more institutional money comes in. I think that might stabilize it a little bit. Because you see it sometimes in those smaller, smaller coins where there's not so much trading volume. Obviously, the spreads are bigger, then the book is not as full as like with obviously Bitcoin. And so you can manipulate more. Like with a smaller size, you can, push up the prices quicker and dump them quicker. And so I think if there is more money coming in, now obviously you have more liquidity in the books, and you have more buyers and more sellers, and then I guess it might stabilize a little bit. But on the other hand, I mean, for institutionals, at least to those institutionals I speak in Germany, most of for them crypto is Bitcoin, maybe also Ethereum.
Ethereum, yeah.
But all the other altcoins, they're not dealing too much with it. Maybe with the top 20, excluding the stable coins.
Yeah.
But for most of them, for them crypto is Bitcoin.
Yeah.
So at least they say, okay, we want to get exposure to crypto. That means for them exposure to buying Bitcoin. But still, I mean, it's for me, I didn't come into the crypto phase from or sphere like the first movers. The first move, they got into crypto because it's like a technology and like a thing where they thought the state doesn't have access to, and it's like very transparent. It's not feared. So this were their motivation, I guess, rather than today. It's for many people, it's now just very volatile, goes up and down like hell. And it's like a transparency, and I think those people who came in at the very beginning, they weren't happy when Wall Street came in, because they said, well, now they're just coming for the profit, which is, I guess, true. And now for them, Wall Street is kind of that it helps them to get mass adoption because they're coming in with more money, making aware about crypto. But obviously, for the first movers, they come in for the wrong reasons, in their opinion.
Mm.
But I think you have to get the institutionals into for the mass adoption, because many people might want to get exposure to crypto, but they don't really know how, and they are still skeptical. I think it's different for them when they can buy it in their normal account at the bank,
Yeah.
get normal exposure.
Yeah.
Because it's the same when I spoke with my friends and I told them, yeah, you can open a MetaMask account. And I tried to explain them what it is and how it works. And when I told them, yeah, but you have to make sure you never lose the key. Otherwise, you're screwed. No one can help you. They said, oh, no, it's too risky for me. So I think currently, especially like DeFi, is still too complicated for people who might want to get a little bit exposure to crypto. So for them, it's still, they're still happy that they have like a centralized exchange where they still have a username, the password. They
Well,
can call someone, say, look, I forgot my password. Can you help me?
yeah.
So you can reset your password. So for them, it's still kind of Web 2, and they're still not ready for Web 3.
Fair enough. Yeah, almost need a tattoo of the code on their arm.
Exactly.
Because it's so, with a traditional bank, you walk in and you can verify who you are, but with that, you lose it. It's you're in trouble if there's anything in there.
But then again, for those people who came into crypto at the very beginning, obviously for them is the big thing that it's decentralized. So they say, no, I don't want one person or one institute to have to reset my password. I want to be independent. So, for people who are, I would say, brave enough,
yes,
to really dive in, for them, Web3 is already here.
Yeah.
But for everyone else, it's still too risky and too complicated, because the user interface from Web3 is still not as intuitive, I would say, as Web2. So for most of people, it's still a little bit too scary.
Yeah, absolutely. And you can understand. I mean, we were all raised with the traditional banking system, and I mean, we're used to it. Most of us aren't early adopters. I'm curious, because of FTX and things like that. For anybody that doesn't know, there was FTX that had a big falling because they were fraudulent in their activity. And what was it? Several billion, 13 billion or something.
Yeah.
And
but in this case, I would say with FTX, everyone says it's crypto. I think in this case, I would say, yes, they were trading obviously with crypto.
Yes.
But it was not crypto's fault that everything fell apart.
Right.
I guess they could have traded stocks as well. And then, I mean, if they did this shenanigan with stocks, they would have.
Well, where I was going with that, I agree, but where I was going to go was regulation, and they weren't being watched because, and I'm not anti-regulation, I'm not pro-regulation, I'm neutral in this conversation, but I'm curious about what your thoughts are on regulation stabilizing the volatility of these things, and I know a lot of people don't want that, but I'm just curious what you think. Will it help?
For me, it's the same. Like, on one hand, I think regulation would help for the mass adoption.
Right.
But obviously, it's a little bit counterintuitive. Obviously.
It is.
When you think blockchain, with regulation. But I think it would help for the mass adoption. Because if you, I mean,
oh, I lost you. Oh, you still there? Tobias, you there? Oh,
yep.
I lost you for a minute there.
Okay. Now, are you here? Yeah. Okay.
Yeah.
I think if someone is as crazy as me, I go into DeFi and I risk some money, and now it could I could lose it. And in this case, if I know, okay, if I put in $100 and I might lose it, I personally don't need regulation because I know, okay, if it's gone, it was my fault. But if you want to have the mass market in, I think then you need regulation. But obviously it depends if you do the regulation um, to kill the market, then it doesn't help, And
Yeah.
currently, I think US is, in my opinion, or let's say, I don't understand how the US is dealing with the regulation right now with crypto because of the fact that they don't have a regulation. Obviously, many companies say, okay, we're not setting up shop in the US because we can't. There's no regulation, and so they go offshore. And then, if an American would like to buy crypto, he's driven offshore because there's no company in the US. So either if he's lucky, he maybe can onboard at a company which is like in a regulated area, like maybe Europe. But if this is not possible, he has to go offshore where it's not regulated at all. And maybe he's not as risk averse like me, where it's okay, if the $100 are gone, I know I risked it and I lost it. Maybe he just said, I want to have exposure, but I don't want to lose it just like this, And so they're driven offshore. So I don't understand that US doesn't say, okay, we are going to regulate, we are going to listen to the market, but then companies can set up shop in the US. And then the US can, supervise them. So I think that would maybe be the better way because then they have kind of, the oversight on it. If they're not regulating at all and say, no, we're not coming out with a regulation at all, but we are going to kind of, I don't know, like to say, we're going to hunt you. And obviously no company will come and set up shop in the US.
Yeah.
So, yeah.
Interesting.
It's a tough question, but like when I speak to institutions in Germany, obviously they say we can't invest if it's not regulated because it's not our money, it's our shareholders' money or it's our customers' money.
That's right.
And if I buy Bitcoin and it gets lost, my shareholders or my customer will sue me.
Yeah.
So I have to have maybe an ETF or like a listed financial vehicle or some regulated environment where I can buy crypto. So that's the it's a fight between, or for me, a fight yes or no to regulation.
I feel you, man. I feel you. I'm the same way. And I mean, these centralized digital currencies too, I don't know where all that's going to go. I think there's a lot of pushback because of that too. Just a lot of the rumors that are going around of, so it poses a question, right? Like, what would you choose? Cryptocurrency, cash, or gold, right? And I mean, that's a tough question to ask based on the current climate we're in. I mean, I don't know. I would choose cash right now is pretty important. Gold is more important. Crypto is so good in a lot of ways because it's decentralized. It's an interesting time that we're in. So
Yeah.
I have no idea where it's going to go.
Yeah.
But I won't speculate.
Yeah, I think it always depends on for what reason you need fiat, gold, or crypto.
Yeah.
I think you can hold or buy all three of them, but I think everything is for a different reason. I mean, it's hard still, at least until now, it's harder to pay in physical gold and in Bitcoin. I mean, there are some shops or many shops more and more who accept Bitcoin. But obviously for just normal transactions, daily life, cash is still king.
Yep.
For, let's say, storing wealth and maybe transferring wealth from, let's say, either one phase into another one, be it from like, during a war to after a war.
Mm-hmm.
Gold might be a very good, means to transport wealth over to the next period.
Yeah.
And crypto is obviously if you want to transfer it worldwide,
Cross borders, right?
Yeah, because I mean, you only have to have your access key, let's say, in your mind, and you don't have to take necessarily a chip with you or some physical tool. Whereas with gold, I mean, you have to take the gold with you.
It's heavy, and it's very heavy.
Yeah, so it's that's the difference. But I think you need everything, or you can have all three of them, but each for a different reason.
Fair enough. Yeah, good
The
answer.
same with people ask me, so would you buy physical gold or digital gold?
Yeah.
And then I say you can buy both, but I wouldn't necessarily buy them both for the same reason. You buy them, I would say, for different reasons, but you can still buy them both. So.
Mm-hmm. Mm-hmm. Well, I guess the good thing if you're in that position to ask that question, you're good. You're in a better spot than some, so that's good, right? You can transfer your value to somewhere. So look, I've been going down a rabbit hole, and I'm not sure if you're interested in this. Jim Simons of the what is it? I was just watching it yesterday. He's a quant investor. He started a fund I think it's in New York. And he used to be a fundamental investor, and now he's a quant. I'm just curious if you ever have looked into that sort of thing, like what the differences are.
I was never really a fundamental trader because I was, as mentioned, an execution trader, meaning my longest, let's say, investment period was for 1 day only.
Mm-hmm.
So execution trader just meant more or less I got an order and I had to execute it according to the instructions I got from the fund manager.
Okay.
So it could be, buy 500 Daimler stocks over the whole day.
Mm-hmm.
And then my aim was to beat the so-called VWAP, the average price of the whole day.
Okay.
So I wasn't necessarily trying to buy at the lowest of the day. I always tried just to beat the average price of the day.
Mm-hmm.
So it's a different it's a different execution than if you're like a fund manager and you just more or less want to say you want to buy it at the lowest price and then sell it at the highest price.
Yeah.
Or as a prop trader, for example, a hedge fund trader.
Yeah.
So it's a little bit different. But I was more or less, my longest period I had to think, I have to guess the price was 1 day. Even though, let's say the guy came back the next day and said, look, now we are going to buy the next 500,000. I would start from the new price now. So it would be different. So the fundamentals for me never had such a big impact unless there was maybe, like a press conference with the new, I don't know, yearly numbers coming out, or let's say profit warning. So obviously there was something fundamental that also impacted the price on the same day. But it wasn't that I was studying the balance sheets and then saying, okay, having in mind maybe the balance sheet said something, maybe said sell, and I said, okay, but I have a buy order now. So the quant is obviously a little bit different there with all their models, and they're way more long term driven than I was. I was very short term.
Yeah. Yeah. Well, I recommend looking into it. If you nerd out on that stuff like I do, it's called the Medallion Fund. I thought of it.
Okay.
Jim Simons,
look it up, yeah.
Jim Simons Medallion Fund. It's really, they were getting better than Bernie Madoff returns. Obviously, that was what it was, but yeah, it's an amazing story, and he's a mathematician first, which is really cool. Anyway, been a pleasure, Tobias. And
Likewise.
there could be a lot more of this, but we can only do it for too long. I mean, the listeners are busy. They got other things to do too, right? So I've got one last question for you.
Sure.
What kind of advice would you give to somebody that is starting out in trading or any industry? What is it? What advice would you give them?
I mean, especially in trading, I think, you first have to obviously read about trading and, learn certain words or, that that are usual in the trading arena. So, but then especially in trading, you just have to trade. I mean, you have to risk money, even though if you do very little in the beginning. Paper trading is okay, but still, if you have money on the line, it's different. Because if you just do paper trading, everything is very theoretically, and most of the time probably you trade perfectly. But as soon as you have money on the line, it's different. So I would say maybe start with paper trading and reading about trading overall, and then very soon start trading with money. It doesn't have to be a lot, and especially like in crypto, you can pay you can deposit very little amount and buy very small fractions of the coins. Even with Bitcoin, if you buy Satoshi, it's not, you don't have to buy a whole Bitcoin. So you can start very small, but you have to do it. You have to trade so that you see what happens if you lose money, what happens with yourself, how do you react?
Yes.
But also, if you make money, if you win, still, how do you change your plan? Do you get nervous? Do you sell too early? And so on. So it's and this is an ongoing process. So that's especially in trading, you learn a lot about yourself. So it's,
well, and that's the biggest thing. And I love that you're self-aware, and that listening and seeing what happens within yourself when you do these things is more valuable than the dollars you get from it, right? It's like
trading is I'm not sure like the ratio, but I think some people say 80% of trading is psychology, and so I would say maybe more because the mechanics, how to buy, how to sell, all the type of limits, that's easy. That's you can learn this, watch YouTube videos, and so that's not the hard part. But how react, the way, or how do you react when you're losing or when you're winning? That's more or less when the hard work begins.
Yeah, man, absolutely. Well, Tobias, don't go anywhere. We'll wrap this up, but I want to talk to you about a message that we connected about. So thank you, everybody, for listening. Much appreciated. And we'll see you next time. Greg Sheldon here, your host of Metal, Steel, Manufacturing, and Business Pro podcast, where you learn everything about the metals and manufacturing industry that make your modern day life possible.